Bismillah ar-Rahman ar-Rahim. Assalamu alaikum, my dear brothers and sisters who are watching all around the world today. My name is Natalie Zoghbi and I'll be bringing forward to you a topic relating to investments and finance. I am honored to introduce our highly respected panelists who are with us today. We have Professor Mohamed Iqbal Asaria, who is a highly recognized leading expert in Islamic banking and finance. He was a member of the Bank of England's working party set up to facilitate the introduction of Sharia-compliant financial products. He has worked on developing the FTSE Sharia Index and its constituents. We also have respected brother Naushad Virji. Naushad is the founder of Sharia Portfolio, a professional wealth management firm specializing in helping Muslims invest without compromising Islamic values. Sharia Portfolio was founded in 2003, which now serves clients worldwide. Our aim today, inshallah, is to shed some light on how to manage investments and, most importantly, managing our investments in a halal manner. As I moderate this program, I encourage you all to please sit tight until the end, where I will be asking the panelists the golden question, and we shall begin. I'll open up this question starting with you, Brother Naushad, please. In regard to the current situation that we are all experiencing, everybody is expecting a market crash in the following year. Do you agree with this statement? And if so, what states will be hit the hardest?
Assalamu alaikum, and first of all, thank you for having me. Conferences like this give the Ummah a great place to gather and learn from each other. So thank you, and thank you to the organizers for putting this together. I do agree that there's going to be some volatility. The reason 2020 was such a great year for the stock market is because there was really nowhere else to invest. You've probably heard a lot of professionals talking about this. When you look at interest rates, look at bonds, savings accounts, you're pretty much getting no return. So there really isn't a good alternative to stocks. So the stock market was the only place to really park capital. And therefore, all the liquidity out there just kept coming back into the markets and kept propping up the markets. We're now at all-time highs, and we're beginning to see some volatility. And what really started this? Interest rates. Interest rates started to go up, and we started to see 1.6% yields in the bond market. And that, of course, now means there are alternatives. So people who are investing in bonds and CDs have an alternative to stocks. However, the stock market is still giving you far greater yields than bonds will. There are a lot of stocks right now that are giving yields of 4 or 5%. There are REITs that are giving yields of around 4% now. So there's still a lot of good value in the stock market. So I'm not expecting a huge exodus from the markets. I'm not seeing a massive drop like what we saw in 2008. I don't think that there's a major systemic problem. But I do think there's going to be choppiness. I think there's going to be sector rotations, which means there are areas that have been neglected last year. There are a lot of areas like consumer defensive names, companies like Procter & Gamble, for example, that didn't do as well because they were not, in the news every day. Companies like Tesla, Zoom, these are the names that really took off, the COVID plays, if you will. So we may see some rotation this year out of some of those type of stocks and into some of these other names that were neglected. Even airlines, for example, look at Southwest Airlines. It's up 70% in the last 6 months. And at the same time, Tesla is down pretty substantially just in the last few weeks.
Thank you. Thank you for answering that for us there, Brother Naushad. Professor Mohamed Iqbal, would you like to mention anything there?
I just like to say that compared to previous times, the banks are a little bit more better capitalized. So with the new administration in the US, the lending of banking regulations has come to a halt, and there's a flow to the whole situation. So yes, there will be volatility. But as economic activities up, then company profitability will also pick up. So that will under market values. Naushad has said bonds are now not a one-way bond. So go up, bonds will go down. And the whole investment structure of the last 40 years is under question. However, expect a major crash of any sort.
Yes, thank you. Thank you so much for sharing there. And thank you to both of you for sharing your knowledge on that matter. The next question will be directed to you, Professor Iqbal. You are a leading expert in this matter. Could you please share with us in what circumstances is the stock market haram?
In principle, the stock is never haram because it is an investment, a risk investment into shares. So in Sharia terms, that is fine. You are not doing anything wrong. If, on the other hand, you indulge in short-term trading too much, with the intention of short-term trading only, it may become questionable, although very difficult to say when it becomes haram from questionable. Because what you're investing in is long-term growth in those companies. You are putting your money, potentially even expecting to lose the whole of it. It's not underpinned by anything. Kind of activity is never haram. The only thing which creates problems in the stock market is that if you invest in companies which deal in haram products like alcohol or gambling or pornography and so on, and where the screening come from.
Professor Iqbal, we are having a little bit of difficulty hearing you there, so we might come back to this question here. We will move on to Brother Naushad. Now, Brother Naushad, considering you are the CEO in an investments firm, could you please share your view on this question for us? What is your view on investing in cryptocurrency? I mean, we're all going crazy over this term, right? And should we or should we not?
Yeah, that's a great question, and it is something that a lot of people are talking about right now. So let me start off with a quick background on the topic. Cryptocurrency is a virtual currency that is based on blockchain technology through a decentralized network. So one of the defining characteristics of cryptocurrencies is that they are not issued by any central authority, and therefore they avoid government interference and manipulation. They're criticized for often being used for illegal activities and exchange rate volatility. However, they're praised for inflation resistance and transparency, again, due to the blockchain technology. Cryptocurrencies are very volatile, partly because they're very thinly traded and also because there's no particular asset backing, such as gold or the strength of a government. Tesla announced that they plan to accept Bitcoin for their cars. When more companies begin accepting cryptocurrencies as a form of payment, this will really help stabilize the value of the currency. We may still be far away from that, but we are continually moving in that direction. The space is evolving, but at the moment, it is very speculative. People often think of investing in shares to be just as volatile. However, whenever you buy shares, you are becoming a part owner of an existing business. It might be a very small percentage, but you are a business owner. As such, you have to approach investing in stocks the same way you would approach investing in a friend's business idea. If someone came to you and said, hey, you should invest in this concept, this new startup idea that I've got, you're probably going to ask quite a few questions before you get into that. Things like, what makes this company different from any other? Who are your competitors? How strong is your management? What are the assets and cash balance? How much do you make every year? There's probably 100 other questions you would ask before you invest in any kind of startup or new business venture. You can do the same when choosing a stock to invest in. Companies have some intrinsic value. It's your job as an investor to study the company you're investing in and to try to buy the shares below their fair market value. And this is what makes investing in shares and stocks a little bit different from cryptocurrencies, because cryptocurrencies don't have that backing. But as I said earlier, once more and more companies start to accept payment, there may be a little bit more stabilization. But right now, it is a very volatile area, and we prefer to wait until things stabilize in the cryptocurrency world.
Yeah, thank you so much for mentioning that there, Brother Naushad. I mean, many of the things that you had mentioned around the questions that we should ask prior to actually investing, some seem to, you know, not ask those questions. So thank you for actually focusing on that part. Brother Naushad, while I have you there, I also have another question. What do you suggest we do to move from haram, forbidden, to tayyib, wholesome investing?
Great question. You know, one of the things I was talking to Dr. Iqbal the other day about this, and you know, in the past, a lot of people would say that, you know, we don't have alternatives. We don't have anywhere else to invest. That is not the case today. There are a lot of Sharia compliant offerings, you know, both services and products around the world. We have our own line of ETFs, for example. We have 3 publicly traded ETFs on the New York Stock Exchange that allow people to have an investment in either stocks or sukuk, which are Islamic bonds, or real estate. So you have 3 products right there, and this is just our firm. There's so many other firms also offering their products and services, not just in North America, but around the world. So we do have the solutions available to us. So it's no longer an excuse to say that, well, that there isn't an alternative. Now, the other thing to think about here is, as a Muslim, do you go to bars? Do you visit casinos? Probably not. So why would it be okay to profit from those ventures? You can invest while avoiding things that are not per your own personal values. So when we invest in Sharia compliant investments, it doesn't mean we're sacrificing return. What we're giving up is investments in sinful areas like gambling and adult entertainment and casinos and alcohol, these kinds of things. So we do have those alternatives, and just as, you know, one of the comments I hear from a lot of people is, you know, I don't really want to go to this halal restaurant because they also serve alcohol, even if their meat is zabiha. So in your own stock portfolio, are you investing and profiting from some of those areas? We can't really criticize the restaurant owners for selling alcohol if we ourselves are profiting from alcohol sales through the mutual funds that we invest in. So I think that this is a very timely and important consideration, and I think we have very little excuses to not avoid those areas.
I'd also throw this question over to Professor Iqbal as well. Welcome back. As we were talking with Brother Naushad, this question for you also would be really interesting to understand your view. What do you suggest we do to move away from the haram to tayyib, wholesome investing?
Okay, sorry for the connection issues, which is one of these occupational hazards of Zoom and online meetings. Anyway, I think, as Naushad has said, and we were discussing only yesterday, that over 10 years, a lot of my students have done work in this area and back-tested some portfolios and shown that really there is no performance penalty in investing in only Sharia compliant stocks. In fact, there may be benefit. So in that case, the argument that you will lose out is gone. The question is, how do we make sure that we are investing in things which are halal, which are permissible, and increasingly now young people are asking, which are wholesome, which are tayyib as well, so that we are looking at responsible finance, looking at climate change, environmental issues, sustainability, and so on. And as I was sharing with Naushad and you yesterday, in fact, our studies show that if you have a common core of Sharia and ESG stocks only, you will do better than both separately and better than the normal index as well. So really, the argument that either it is not halal, it is not profitable, or I'm losing too much, I don't want to be halal to lose too much, is gone. The only question now to answer is this: can you become obese on halal junk food? If you can, you have a problem, right? So how are we going to make sure that junk food is controlled in your portfolio or similar positions? If you still continue to become obese on halal junk food, then you have a problem.
Thank you so much for sharing that there, Professor Iqbal, especially that great analogy for us to understand. As we reach the final moment of our session today, as promised, we do have our golden question, which will be presented to the panel. Brother Naushad, would you mind answering this question for us? And I believe we would all love to know this. Where do you advise our audience to invest now and in the near future?
Well, that's always the $1 million question. And when we have a situation like what we're seeing now, where there are sector rotations happening, where there's more volatility and speed bumps in the market, even if we're not expecting a major drop, where do we put our money? One of the things that is that a diversified ETF portfolio is a really good place right now while we wait for things to settle down. So the Sharia compliant ETFs I mentioned earlier, and I saw someone here was asking, what are these ETFs? I would recommend take a look at sp-funds.com, and you'll see 3 of them right there. But the concept is that one of them is a Sharia compliant index of the S&P 500. So you're probably all familiar with the S&P 500. Those are the 500 largest companies in the United States. And this is followed all over the world. A lot of mutual funds are constantly trying to beat that index of 500 stocks. So we decided, and we saw that on average, 20% of mutual funds actually beat those that index. So we thought, instead of trying to beat it, why don't we just be the index and beat the funds 80% of the time? So our stock ETF, the symbol is SPUS, it is basically just the Sharia compliant stocks within the S&P 500. And one of the things, as Brother Iqbal was mentioning, when you do the back testing, the returns are really incredible. I mentioned this to the folks at S&P 500. And initially, they didn't really believe me, and they said, we're going to look into this ourselves. And when they did, they called me 2 weeks later, and they said, you know what, we really want to partner with you on this. The returns look fantastic, and we want to be a part of this. So their name is actually on all of our ETFs. And just to give you an idea of how it looked last year, the S&P was up about 16%. The Sharia 500 was up about 26%. So like Brother Iqbal said, you don't have to sacrifice returns to be Sharia compliant. And index funds like these, and not just ours, but others that are out in the market, they're a great place to be in a situation where the markets are getting to be a little bit turbulent, because it gives you some diversification. Instead of putting all your money into 1 or 2 or 3 companies, you can be in a couple hundred of them and still do well overall, without having to take extraordinary risk.
Thank you for sharing that there. Professor Iqbal, did you have anything to note on that at all before we reach our closing?
No, I just small comment. When people may not make a distinction between investing in individual stocks and investing in an ETF or an exchange traded fund. What an ETF does is to give you exposure to a wider area than specific stocks you have chosen, and protects you against fluctuations in individual stocks, right? So I think it's a much more, it won't double or treble like one stock may, but steadily it will, over a period of time, give you a much more steady and safer return than individual stocks can. So I think Naushad and his group have done very well to go for ETFs rather than just doing a managed portfolio of stocks, individual stocks and things, which is a different business altogether. So I think, yes, that's the only thing I wanted people to just look up. They could search for ETFs and understand what ETFs are as opposed to individual shares.
Perfect, thank you. And that's the answer to our golden question for today. Thank you so much. And as we reach the end of our session, to our audience, if you have any questions that you wish to send through, please direct them to either Professor Iqbal's email, which is MIA, MIA at afkar.com, and or Brother Naushad's email, which is naushad at sb-funds.com. I would like to thank you both for your time today. I mean, inshallah, you are rewarded immensely for sharing your knowledge, and we really appreciate you taking your time to share your advice with us. Assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum salam. Thank you for having us.